For those of you wanting a bit of extra support on budgeting assignment number 3, this video is for you. In this short clip, we'll review cash flow assumptions, look at how to fill in the cash flow template, and briefly go over the assignment. So let's begin by looking at the cash flow assumptions for the health program. As noted in lab, the important thing to take away from the assumptions is how much cash is leaving and coming into the organization and when. As you review the item expenses, you'll note that some of them, such as salaries for personnel, will be reoccurring, while others, such as the purchase of equipment and some supplies, will be one-time, non-reoccurring costs. For each line item, column D explains when the line item is expected to be paid for, column E details the number of units for each item, and column G details how much the item will cost each month. Column F also helps in determining exactly how many months each item should be accounted for in the cash flow, although in some cases where the number of months in column F do not correspond with what is stated in the assumptions in column D, you should always defer to what is said in column D when entering in the cash flow. Now, some of the assumptions are tricky, so be sure not to get confused. For example, for the line item Motivation for FP Champions in row 21, the assumption states that 10 units of this line item are to be paid each month. Thus, every month you should expect to pay for 10 units of this item at a rate of $50 per unit. In addition to informing you of the amount and timing of the health program's cash outflow, this tab also tells you about the amount and timing of the program's cash inflow and beginning cash balance. You should use this information to begin filling out the health program's cash flow template in the next tab. Here, in cell B4, you will fill in the program's beginning cash balance as given in the previous tab. This is the amount of total cash that the organization has at the beginning of January. The beginning cash balance in the next month, here, will take into account January's beginning balance, subtract the expenses of January, and add the revenues of January. As you found in the previous tab of assumptions, the program's only revenue, the funding from USAID, will come in January. You will enter in that amount into the cell here in B6. Since there will be no more revenue coming into the organization after this point, you should be sure to fill in zeros for the remaining months. To calculate the net cash flow, right here, you should subtract the month's total expenses, also known as cash outflow, from the month's revenues, also known as cash inflow. To determine your end cash balance, you will then add your net cash flow to your beginning cash balance. Note that the end cash balance for one month will be the next month's beginning cash balance. In the next tab, Part 2, you're asked to complete the organization's operating budget by filling in the cells highlighted in yellow with the health program's cash inflow and cash outflow. In order to answer question 3B in the assignment, you will also have to manipulate this operating budget by zeroing out the beginning cash balance, right here in B5, and considering what the organization's end balance would look like if it started the year with no cash. The assignment also asks you to analyze the relationship between each program's revenues and expenses. Question 3D asks whether or not the program's costs are in control. In other words, how well the programs have managed their expenses and revenues. This concludes this video of budgeting assignment number 3.